about a housing rebound for Christmas this year? Yes, thank you. Well, Hopium might be the gift that is wrapped under your tree. Joining us now with the take from Chicago is Matt Garrison, co-founder of South Street Capital. You know, so far, Matt, this housing recovery has kind of come in fits and starts, and yet I'm starting to feel maybe, just maybe, this is for real.
Yeah, you know, it's a good news, bad news story, I think. I'll quote some Dickens for Christmas, you know, the best of times, the worst of times. On one hand, supply and demand metrics are very strong. You have an increased pool of buyers chasing a diminished pool of inventory, and that's going to drive prices up. That's going to make homes go under contract more rapidly than we've seen in the past. So I think the bottom is probably in our rearview mirror at this point. And there are several kind of bullish factors. I don't think you're going to see rocket fuel or housing ripping up or anything because of some of the potentially negative or uncertain factors.
I don't know what it's like, Matt, I don't know what it's like there, but I know around here, we're seeing houses and apartments in New York go for more than asking. We're seeing bidding wars again. We've heard the same about Miami and some of the other hard-hit markets as well. Does that worry you?
It doesn't worry me. I think it's a good sign. So, you know, over the past 24 months or so, the only people that have sold are people that have had to sell. You know, prices are down 30 or 40%. You're not going to sell your home at those depressed levels unless you have to. So the amount of inventory on the market, especially quality inventory, is way down. Rates are good. The economy is getting better. People want to buy. They're chasing a diminished pool of inventory. You're going to see multiple offer situations. You're going to see prices go up.
I sound like a broken record here because we always talk about the fact that mortgage rates, yes, are at historical lows, and yet so many people find it difficult to get a loan, right, to qualify. Might it even be better to slightly have higher mortgage rates and actually make it easier to get a loan?
Yeah, you know, I think the conventional wisdom is that mortgage rates and housing prices are really strongly correlated, and I'm not sure that's the case. High rates definitely affect the affordability of housing, but high rates aren't necessarily a bad thing if they mean the economy's picking up, unemployment's down, consumer balance sheets are stronger. So it's not necessarily a bad thing if there's high rates. Now, in terms of getting a conventional loan on a single-family home, it's a very difficult process right now. I just went through it myself. We buy office buildings in Chicago, and it's easier to get a loan on a 200,000 square foot office building than it is on my personal residence.
Yes, because you have cash flow from an office building.
Well, that's true. I'd like to think I have some cash flow on my personal residence too, but a lot of it's capital gains income and kind of you know, unconventional things.
And selling them on the open market, I suppose. Matt Garrison, thank you very much. All right, happy holidays, Merry Christmas, Happy New Year, whatever it is you celebrate. We salute you.
Merry Christmas, guys. Thanks.
Thank you very much.